Good evening, and welcome back from a long hiatus. I just wanted to point out a seasonal trade that comes about every year, and it has to do with tax loss selling. This year, the two things I played were Amazon and Tesla, and you can see why. This is a chart of Amazon, and since August, it's gone down from 145 to 80. Nearly a 40% drubbing there. And what made this one that much nicer was that we had this low, a lower low, and an even lower low on the 6th. So this day is December 30th, the last trading day of the year. And, it doesn't exactly happen exactly on the calendar switch off, but I did start building the position in here and then added on that little tail down there. But the reason is you have three lower lows in price, and then you have these higher highs in momentum. And that played in perfectly with the timing window of tax loss selling, and we got this rip up to the upside. The January expiry happened around here on this day right here. I think I was out of it around here, but between here and here, that was a 10x on the call options. Trying to remember, I think it was the 90 and 93 call options that I had purchased for like 30 cents or something very, very cheap. And then as we got up into here, they went up over $3. Similarly on Tesla, and Tesla had an even bigger fall in the last month. It's had a big fall from here, 312 down to 104. But even if you just look at the December move, 198 to 101 is practically a 50% haircut. And we did also have a similar divergence where this low was made here, and this low, I guess that you really could call it, three-legged, although I do prefer to have a little bit more room between the three lows. But we did essentially get the same pattern here, just a little tighter, and we launched. This day closed at wide range from about 102 to 113. And by expiration, we had gotten, I guess this was the high, 136, and then, subsequently 214, doubling off of this low in 30 trading days, 32 trading days. On this one, I ended up selling out at around 4x. I would have gotten the 10x. I think I was listening to some news one day, unfortunately, and just bailed on it. But the key there, and I've done this research before, if you take the biggest losers in December, you would attribute a large part of that loss to tax loss selling, and they typically are the biggest bouncers in January. And I did a study one year where I looked at weekly optionable stocks, and I ranked them in deciles of how poorly they performed in December. And like clockwork, the worst performing decile in December was the best performing decile in January. And I think that held for 2 or 3 of the deciles. And as you got into the middle, it was just sloppy. So that does show some statistical significance that happens. And we all know that there's tax loss selling at the end of the year. If someone has gains, they want to offset them with losses. They don't pay the 37 or 40, 50%, with state taxes on that, and that is a very powerful motivator. So anyway, I hope you enjoyed this little video, and I'll try to make them back more often out of my pseudo-retirement, and look forward to building the community again and moving forward.